Hello traders, Cousin Vinny coming to you from theclosingprint.com, June the 7th, 2020. In this edition of your weekend video newsletter, we'll discuss the remarkable performance in the indices last week. We'll look at some stocks that we will be interested in trading. The big cap tech names all moved higher with the exception of Netflix. We did see the bond stock ratio continue its bullish trend. Bullish for equities with the Dow Composite trending above the 200-day moving average and the S&P 1500 improving and bullish. While the XII ARC Institutional Index continues to give us the thumbs up from institutions, their core portfolios are performing quite well. We also saw NIMO, NAMO, NASI, and NYSE improving and bullish, with only two caveats, that being one, the breadth thrust indicator is at extremes plus 30%. You know, that's usually where we start to see a little pullback. It also shows extreme strength in the trend. In addition to the S&P equal weight index, A50R is overbought at 97%, with the number of stocks above their 200 period moving average at 60%. So the latter number tells us that we could see more upside. The former 97% says we're a little bit overbought short term. We could see a little pullback early in the week. The put-call ratio is at 0.65. That's telling you people are buying more calls than puts. VIX 2751 the week before, down to 2452 this week, giving us a bullish signal with bullish percent at 81%. The last time bullish percent was at this level was in July of 2009 at 83.19%. The market's continued higher for another 4 months, indicating extreme strength in the trend. US dollar continues its bearish trend of late, having lost the 200-day moving average. RSI is oversold, so we could see a bounce in the dollar short term. We also saw yields moving higher last week. We'll talk about the 10-year in a few minutes. Gold is breaking down out of a range. It's bearish presently, pulling back out of that triangle we looked at last week. Copper is also trending. That's a bullish indicator for the economy, forward looking. Also bullish for construction related stocks, building products, home improvement, and home builders. And finally, we have West Texas Crude, which has been on a tear over the last 6 weeks. Off of the low, it's up 500%. Heatmap is improving. We got more lime greens and greens. There's a couple of oranges and reds in there, mostly in the healthcare group with the biotechs underperforming. While strength in transports, travel and leisure, media, home builders, oil and gas, and technology continues to improve. We also saw international markets improving, strength in South American countries, Europe, Germany, Russia, India, and the Southeast Asia and China group improving as well. We'll look at these IBD 50 names and some Market Smith Growth 250 in this week's video. We also have a new feature in the Dow Industrials with stocks that are colored green as bullish, looking for follow-through. Stocks that are yellow with an asterisk, they're still trending but could see a short-term pullback in the trend back to the 9 and 21-day moving averages. So all of these stocks from the Dow 30 look good for a continuation next week. While Bukowski is showing 5 and 5 green with a CPI signal green since May the 15th at 99%. That's bullish, with one bearish pattern, 111 bullish patterns, and 129 patterns waiting for breakout. Bottom line, we're still in day trade mode with short-term swings as Gamma continues to keep improving. We have SPY support at 310 and the S&P 500 support at 3100. Make sure you check out the Gamma channel in the trading room for updates to Gamma each day. The S&P equal weight index, which no stock is more important than any other by weight, did move above the 200 period moving average last week. On Thursday, closed above it. Into Friday, we do have the number of stocks trading above their 50 period moving average at extremes. Look for some short-term weakness. Maybe we see a flag or a pullback to the 200-day over the next couple of days before moving higher. S&P 500 A-Rune indicator also with the green line at the highs is telling you it's a very strong trend. The red line is dropping through 50. That's telling to look for more upside potentially before we reach a peak. Price action closed in the upper half of the daily range on Friday on above average volume. The ARCA Institutional Index, as previously mentioned, 75 stocks most commonly held in institutions' core portfolios, continues inside of standard deviation 2, rising and trending between these two bands with the expectation of continuation until we close inside of standard deviation 1, which would be a stop or a sell signal. Presently, we're trending and moving higher. Look for more higher highs and a retest of 52-week highs over the next few weeks with some back and fill along the way. The S&P 1500 composite, a broad measure of market participation, the S&P 500, S&P 400 mid caps, S&P 600 small caps is on a bullish signal. You can see the big trough and the continuation in the trend recently on a green and bullish signal. Histogram is confirming above 0 and the signal line at 2. In addition, if we break down the three components of the S&P 1500 in the top panel, the S&P 500 advanced decline percent on a cumulative basis day after day. The mid caps and the small caps in the lower panel, we can see we're making higher highs and higher lows. All three are above their 200 period moving average. That's telling you that there's a potential for price action to continue moving higher before reaching an apex. Again, monitoring the gamma channel will give us a better sense of when we might see a short-term peak or blow off top. Saturday, I wrote a blog post answering a lot of the questions that we're fielding from members on a daily and weekly basis. I talked about the S&P 500 spiders, going into a lengthy discussion about gamma and how gamma is improving and more positive now, which tells you that institutions are supporting and buying the dips and selling the rips. Areas where we would see support are the gap fill potentially, then the 310 level volume by price support, which aligns with the 9 EMA, and then the 200-day moving average and 21-day, which are right below 300. 236 is just below that, so we have multiple levels of support on any pullback. Some are expecting 7 to 10%, but there's also a possibility, as you well know, that price action can move sideways and consolidate while the 9 EMA catches up. So that's a possibility as well. So watch price action. It'll tell us what to do in the short term. We also saw strength in the NASDAQ 100, closing at all-time highs with a 45% gain since the lows in March. Small caps also had a strong showing last week. RSI continues to move higher through 50, suggesting on this weekly time frame that there is potential for more upside, having gained nearly 60% from the March lows up to the recent highs, back above the 20 and 50 period moving averages on this weekly time frame. Volume starting to increase. MACD showing the bulls have the momentum pendulum in their favor, and that there is potential for follow through. Unless there is some unforeseen catalyst that arrives early this week, I would think that price action could continue along its path higher. Perhaps we see a little flag at the 50 period moving average this week before following through. All of that's a possibility. We just have to see it first, react to it, and trade it accordingly. Here is the NYSE composite. All the price action has been removed, just the moving averages, the 50 and the 200-day. Note how quickly the 50-day has turned up, heading back towards the 200-day overhead. MACD has turned and is crossing as of last week. Momentum is clearly bullish. New York Stock Exchange breadth, new highs minus new lows, is above the zero line. Moving average continues to climb, telling you to anticipate more upside. Advanced decline in the middle panel is pointing higher, making a new high, as more stocks are advancing than declining at the present time. We also see all of the stocks that trade on the New York Stock Exchange, more than 2,900 different companies. This is the advanced decline line for all of those stocks. You can see that we are on a tear, moving straight up. Will we make an immediate pivot and move lower? I don't think that's likely. We have the momentum indicator in the bottom panel moving higher as well. No signs of a change in direction yet. So there's an equal possibility that we continue to move higher on Monday or Tuesday. The NASDAQ McClellan oscillator also turned up last week. What we're looking for is this black line, the moving average, to continue higher and echo what we were seeing in the NASI, the summation index of advanced decline values. Still in a bullish trend above zero and showing no signs of a change of direction short term. So that alone is telling us to look for more upside in the NASDAQ and in the NYMO. We're seeing the same thing. 2,900 stocks on the New York Stock Exchange trading, giving us an indication that this could continue to improve. And that NYSE summation index being more bullish than bearish at the present time, even with the extended move that we saw last week. Short-term VIX indicator is bullish going into the week. This is a 60-minute time frame. As long as it's green, we look for higher highs and higher lows. When it's red, we look for lower highs and lower lows. Therefore, going into this week, we're looking for VIX to continue to drop. That would force dealers and market makers to take profits, as well as volatility continues to shrink in the premium that are selling, further exacerbating the need to buy futures to hedge, which feeds on itself as VIX continues to drop, hopefully back to a more normal range. Finally, we have the Wilshire 5000, an even broader measure of market participation. 5,000 stocks RSI on this weekly time frame is pushing through 50, shows there is momentum, and that we could see higher prices before momentum begins to get too overbought and we start to look for more downside. Price action has a ways to go before it gets back up to all-time highs. Volume is increasing, and the COPOC momentum indicator at the bottom shows that we are far from an extreme level like we saw the last time we peaked back in February and dropped dramatically. You want to be buying into weakness and selling into strength. Presently, we haven't reached the point where we need to sell aggressively. Since the March lows, the bond-stock ratio continues to give us indication that equities should be favored over bonds as this ratio drops, the red line in the lower panel. While yields all moved higher last week, you see momentum indicators turning back up. These crossovers lead to days and weeks of bullish action when it moves higher. This is a positive correlation to the equity markets, as you can clearly see. As the 10-year yield and other duration yields move higher, that would be bullish for equities. We also told you to keep an eye on high-yield corporate debt and junk bond yields. As these continue to move higher, this is telling you that investors and traders are okay with taking on additional risk at the present time, or a risk-on indicator, if you will. We move back above this very large volume by price resistance zone very quickly, telling you how bullish these traders and investors were and remain going into this week. So if this momentum continues, RSI suggests there's more upside potential, volume increased. So we'd anticipate that the bonds will continue to move lower, like the 20-year, with all of the duration bonds moving lower and all duration yields moving in the opposite direction or higher. This is bullish for equities going into the second trading week of June. US dollar has been in a bearish trend over the last few weeks, breaking down out of this triangle pattern, back below the 200-day moving average. However, we are oversold now. So last time we got oversold, and the previous occasion, we did bounce very aggressively. So if you're thinking about going long US dollar, that trade will probably bring you back to the 200-day before you see resistance again. And commensurate with that move lower in the dollar, you would expect to see most commodities moving higher. In this case, copper, a forward-looking indicator Over the last 12 weeks, we've been telling you that higher highs and higher lows were good for builders. Builders are outperforming at the present time. Construction names and home improvement like Home Depot and Lowe's also look good. Those are potential swing trades for the longer term. While gold breaks down out of this triangle pattern despite the weakness in the US dollar, this is most likely due to safety-minded traders unwinding their positions, taking profits. RSI is now below 50 and dropping, looking for more downside with potential previous areas of consolidation, support on the move lower. So look for support around 1520 to 1540 in the short term. If you're trading gold, momentum is clearly fading and heading in a bearish direction over the last several weeks. And then there's crude oil, which also has a positive correlation to the equity market. You want to see crude oil moving higher if you're bullish equities. Momentum is clearly bullish, and volume has been picking up over the last 6 weeks. As we head back toward this resistance level overhead, anticipate some consolidation at that level over the next couple of weeks. If you're trading the energy stocks, oil and gas equipment, and the energy sector in general. The sector heat map continues to improve. If you read this from left to right each week, this spreadsheet is updated as of the close on Friday. Most of the sectors are green and improving. International markets also improved last week, so keep an eye on these. Emerging markets were up big last week as well. We had Germany, Russia, the European countries performing, and even the Southeast Asia countries and China improved last week. In addition, the consumer discretionary ratio to consumer staples, things that consumers don't necessarily need versus things that they do need, when this is turning up, that's telling you that institutions are no longer safety-minded, that they are bullish equities, looking for follow-through. When these indicators turn up, like we did back in late 2018, early 2019, that led to the bullish run. This was the waterfall event in February, March. Obviously, this is a lagging indicator. It's a moving average. But the main takeaway is that we're turning up and that this is more bullish than bearish as institutions are no longer safety-minded going into the second half of the year, when most of them are anticipating improvement in the economy as well as the stock market. Additionally, we want to focus on the sectors that are strongest. Many of them are at 52-week highs. The thing I pay attention to here is how far is it above the 21-day, the blue line, and the 50-day moving average, the red line. Going into the second half of the year, looking for an entry on any pullbacks, any dips, as price action is clearly trending. The 21-day is above the 50-day and rising in all cases. Here are the IBD 50 stocks. We're looking for those that are above the 21-day and 50-day moving averages, the blue and the red line respectively. Many of these will most likely follow through. We earmark Adobe, which looks good. Alexion Pharmaceuticals, which had a little flag and a pullback. That looks like a possibility for an entry. Applied Materials, American Tower looks good. Reversal on Thursday, Friday, buyers stepping up at the low of the day. Anthem Health and the providers continue to look good. Autodesk is running away. Some of you bought that last week. Looking for Bristol Myers Squibb to continue higher. Dollar General to bounce off of that moving average. Dexcom, DXCM, this one looks really good as well. At the 50-day moving average, most likely this is going to have a nice powerful up wave. Dollar General, another possibility for this week. Buyers stepped up at the 21-day, looking for a follow-through and a move back up to recent highs. Facebook also consolidating over the last couple of weeks. This one's looking better. At the 9 EMA, it looks like we could see some follow-through this week. RSI is above 50. Look for momentum. Look for the MACD to turn back up as price action follows through on Monday with a bullish candle. I would only take this if we see something bullish and a move above 233 on Monday, Tuesday, as volume has begun to increase again. Fortinet also looks like it's going to follow through this week We earmarked that one. IIPR, providing climate control facilities for cannabis growers. Intel, one of my favorites this week, coming out of a small consolidation wave down. Looking for follow through. Remember, July is the strongest month of the year. For technology stocks, we're looking for Intel to prove itself by moving back above the highs that we saw over here, above the February highs near 70. And for RSI to stay above 50 and volume to increase. KLAC, same from the same group, semiconductors. Looking for Netflix to move higher. We had buyers step up on Friday, in addition to what we saw on NVIDIA, looking for a follow through there as well. PayPal and the payment processors like Visa are all strong, looking for Square and MasterCard to continue higher. PayPal, buyers stepping up at the 9 EMA, bullish trend, and the 9 and the 21-day RSI showing muscle, volume increasing. Same with MasterCard. There's two ways to play this. I've been trading it with options on the pullbacks to the 9 EMA. I'm in buying options, selling into the moves higher the next day or the day after. You could also buy the 9 EMA shares, which I've done also, and just allow the trend to continue. This is a bullish trend looking like we're going to get back to the 340, 350 zone by year end, the second half of the year, as volume is increasing. We're also looking for Regeneron to bounce off the 21-day, continue higher. ServiceNow, we're looking for a breakout of this rectangular consolidation pattern above 396, 400 in the short term. RSI is above 50. Volumes increasing, and price action holding at the 9 and 21-day moving averages. Trade Desk, another stock that we've been trading with options and with shares. If you're thinking about trading shares, look for a follow-through day. We're looking for dips to buy for options and then sell into the rips. Same idea with Workday. This is looking strong. Nice bullish trend. 9 and 21-day moving averages are rising. RSI is above 50. Looking for more volume. Price action on a bullish follow-through day on Monday, Tuesday would be a buy point for shares with a stop below the 9 EMA. Look to add as it moves higher. If you're thinking about options, look for dips intraday using VWAP for entries, exits, and stops, as we outline in the workflow video that we've been talking about over the last couple of weeks. Zoom Video was a short from the highs as it traded 3 days outside of the upper Bollinger Bands. We were looking for a reversal. We got that on Thursday in spades into Friday, so that position is no longer valid. We're looking for a bounce at the 9 EMA now. If we do follow through, if we break down, it could be a short back to the 21-day. Remember, this stock is up over 220% from where it opened in January up to the present levels. Zymex is also back, a company that develops electrotherapy for pain management and rehabilitation devices for stroke, spinal cord injuries, etc. This one looks very strong going into the week. Bullish follow-through day. Look for a breakout of this consolidation pattern. Volume increasing on Friday. MACD's turning. Most likely this is going to be a breakout above 22.23 to start the week. In addition, make sure you check out the MarketSmith Growth 250 in white, blue dot scan candidates in cyan, and the top volume percent gainers last week in green on this line. We've added an additional feature, which is we'll cover the Dow 30 each week, noting there are a lot of traders who just want to buy a stock and hold it for swings as markets continue to trend into the second half of the year. So look for these names in the Dow 30 as this new feature will be highlighted each week. Stocks in green are those that look like they're going to break out and follow through. Stocks in yellow are still in bullish trends that could see a small pullback. We'll show you an example here. As you can see in this example, Apple looking for a follow-through, Cisco looking for a follow-through. CVX is trending, but does have potential to pull back a little bit or flag. Disney looks like it's trending, could see a little flag as well. Intel, we already talked about. Home Depot looks really good for a follow-through. Goldman Sachs could pull back a little bit with the banks. They're a little extended. Coca-Cola looks like it's going to continue higher. 3M looks very strong. Looks like it's going to continue higher. Microsoft, probably one of the best setups next to Intel for follow-through this week. Has a new feature for traders who just want to swing trade, buy a stock or two, and monitor them through the weeks as they trade into the second half of the year. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on June the 7th, 2020 with your weekend video newsletter. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast, so be sure to check that out in your inbox. Otherwise, take care, have a great weekend, and we'll talk to you soon.